Good morning and welcome to Chaikin PowerFeed, your daily market digest. Today is Wednesday, June 20th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter at DanRusso_CMT. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can sign up to receive Chaikin PowerFeed for free at www.chaikinanalytics.com/PowerFeed TV. Now, U.S. equities closed mostly lower yesterday, though off the worst levels of the day. Small caps outperformed again. The Russell 2000 actually closed in the green on the day. Industrials and materials came under pressure. It's trade wars. That's emerging markets. The bond proxies finished higher in a flight to safety that was led by telecom and utilities. Treasuries were firmer across the curve. Yield came in a bit. The dollar lagged on the risk-sensitive yen cross, but outperformed against the euro, outperformed against sterling. Gold fell 10 basis points, and WTI crude lost about 1.2% after gaining a similar amount the previous day. As we get to the desk this morning, futures are up 30 basis points. Asia was stronger overnight, with Japan as a standout, up over 1%. And European markets are seeing solid gains. Treasuries hovering around the unched line to slightly weaker. Dollar is unchanged. Gold down 30 bips. WTI crude up 60 bips. So kind of jumping right in. Interesting to see. You heard me talk about it for the past few days. I want to see 27.41 tested. Well, I got what I wished for yesterday. That level was tested. You can see the candle here. Support held at 27.41 and does remain in place. Below that, 27.10. Then the 26.58 to 26.75 zone. And then you have 26.58 also brings in the rising 200-day moving average. So the view here remains the same, right? Consolidation within a secular uptrend, and we're beginning to emerge from it. The break through 27.41 about a week and a half, 2 weeks ago was the initial sign. Now we're pulling back to retest that. I think that's healthy. Some may disagree. But if we can hold that, it really solidifies that 27.41 mark as an important level. And importantly as well, the RSI did not become anywhere near oversold. As the market has kind of ticked lower here over the past few days. It closed yesterday at 56. It's still above. It's still in bullish ranges as far as I'm concerned, as long as it's above kind of 40 to 50. That's important. And look at Chaikin money flow. Goes out at the highs yesterday. That's a sign that institutions are using weakness to come to the market late in the day. So, with the RSI in the process of shifting into bullish ranges, with the money flow indicator solidly positive, with support so far at 27.41 holding, I don't see a real need to change my view here that this is a consolidation within a secular uptrend that's ultimately going to resolve through the upside. I think we're going to come back, test, and break through that resistance level at 2,800. So, getting into it, S&P 500 tests the key 27.41 level and holds. Russell 2000 outperformed again. The industrials, we talked about them yesterday. They were weak on trade concerns, but there's another element here, and it's emerging market weakness. We're going to get into that in a little bit today. Sentiment, a little less greedy this week. Not really much to talk about, but every Wednesday in my Note to Chaikin Analytics subscribers, I look at some of the key sentiment indicators that I think are important. Try to find, are we fearful? Are we greedy? Is there a contrarian trade to be had somewhere in that information? Right now, the answer is no. We're less greedy this week than we were, but really not at any kind of extreme. Futures are pointing to a slightly higher open. Major indices based on the Chaikin power bars, the Dow, 9 very bearish or bearish stocks to 2 bullish or very bullish stocks. You can see that they took the brunt of the trade tension news yesterday, down over 1%. S&P 500, for all intents and purposes, kind of held in, down less than 40 basis points. NASDAQ showing you that technology, large cap strength, holds in as well, although we are seeing a little bit of a deterioration here. For the past 2 weeks, this ratio, 25 to 13, has been more like, kind of 3 to 1. Now it's, a little less than 2 to 1. Maybe it's a little sign of technology taking a pause. But small caps just keep getting stronger. 609 bullish or very bullish stocks for 234 bearish or very bearish stocks. Flight to quality sees a bid in the bond prices, sending yields lower. Flight to quality sees a bid to utilities. And that's kind of improving here a little bit. I do still think that is counter trend. And until I see evidence that it is not counter trend. I think you continue to sell weak names in that group. According to the Chaikin Power Bar, small cap stocks more bullish than large cap stocks. We've been talking about it. It's been my central theme for weeks. I've been pounding the table. I just want to make it clear. We're going to go through it one more time today. Stock of the day today. Every day as a Chaikin PowerFeed subscriber will generate a stock of the day for you based on our power gauge rating. Today's stock, K2M Group Holdings. It's a medical product stock that is a strong industry. You can see the stock buck the trend yesterday, up 59 basis points to close at 22.29. As I said, KTWO, the ticker symbol, has a very bullish Chaikin power gauge rating, and the Chaikin power gauge rating for K2M is very bullish because of attractive financial metrics, strong earnings performance, and strong price volume activity. Also has positive expert activity. So let's take it to the chart. Very bullish power gauge rating, strong trend, strong industry. You know what I like to say, fishing in the right pond. What's interesting here is that this is new strength. This is new leadership. Over the past 12 months, we've been mostly neutral or bearish, and now we're on that very bullish rating. Stock has been outperforming the market since May, and now the model and the market are in agreement. The dynamic duo is in gear, and so tactically, do we think this makes sense? And I would say, yes, it does. I mean, look at the overbought, oversold indicator is deeply in an oversold condition and beginning to round higher. Chaikin money flow is strongly positive. Stock gapped down last week to test the rising long-term trend line and is now beginning to rebound. Important to know or try to isolate why the stock gapped down. In this case of K2M, they announced a private placement of about $65 million of convertible bonds. That was the displacement in the stock. Obviously brings a new nuance to the game for those who are engaged in convertible arbitrage. They'll be involved here now as well, but strictly from a process-driven standpoint, this stock has all the hallmarks of a name that you want to own. Very bullish stock, it is a strong trend in a strong industry, market in agreement with the model, and the stock is oversold. If you're following the process, K2M is the type of name you want to add to the portfolio. The sector tracker today, looking at movements over the last 5 days. As we've said, this flight to safety has led to bid to utilities. I do think it's counter trend, but discretionary continues to do well. Industrials and materials really bearing the brunt of the trade tension news resurfacing, and also weakness in emerging markets. Real estate, if you faded it when it was strong a week and a half ago, like we were talking about, got good trade for you. As rates have come in, financials have come under pressure. You know where I stand on rates. I've been talking about it for a while. I think we could test 275, but ultimately we resolved to the upside, take it through 3% towards 3.2%. Tech, going to get some big news tonight. Micron reports after the close tonight. Important name in the semiconductor group, which is important to the tech sector. We want to see Micron do well. We want to see semis lead. We want to see technology leading at 26% of the S&P 500. And we want to see the breadth there widen out beyond the FANG stocks. Industry in focus today, aerospace and defense. This is part of that industrials group. Bottom of the list. Tough group to be in. It's actually the 21st ranked subsector of the 21 that we tracked, having ticked down a slot over the past week. And here it is. Look, 10 very bearish or bearish stocks to 2 very bullish or bullish stocks. It actually has outperformed the S&P 500 over the past 6 months by about 3%, but this ratio is troublesome. I think that if you have names in this group that have had a nice run, that are now, bearish or neutral, it's a good opportunity to take some money off the table. Take your profits. Let's not get greedy. Follow the process. Trust the process, as we like to say. Chaikin's a Philadelphia-based company, and even though I'm in New York, I get it. The 76ers mantra of trust the process. So some of the indicative names in the space: BWXT, BWX Technologies, Environment, AVAV, and Mercury Systems, all with very bearish power gauge ratings. If you own them, you might want to think about selling them. If you short stocks or play for the downside through the options market, these are names you want to look at. Taking a look at Mercury Systems today, very bearish Chaikin power gauge rating, closed at 37.70, down 2.3% yesterday, massively underperforming the broader markets. Does have a weak trend. They're telling you the industry is strong, but that's because it's being lumped in here as a computer and office equipment name. However, it is also part of the aerospace and defense group. You can see this stock is, this rounding top here before breaking down and now coming back to test the breakdown level. It's been underperforming the market since January. It does have that very bearish Chaikin power gauge rating, so the market is in fact in agreement with the model. So you know that this is a name at the very least you don't want to own, and maybe you might want to consider putting out on the short side. Money flow, it's been a mixed bag throughout this year. Hard to see any discernible trend there, but it did tick negative recently, below the falling long-term trend line, came back to test resistance at the $40 level and is now fading. We are oversold, so maybe give it some time here to consolidate between 36 and 38. When that indicator turns overbought, that will be your signal to get the stock out of the portfolio or potentially open a position on the short side. Also worth noting, past two earnings reports have surprised to the downside. MRCY, not a name that we want in the portfolio. Our trending names, looking at yesterday's S&P 500 movers, gainers and losers. CVS was a loser the previous day, sees a little bit of a rally, up 4.5%. Netflix, Momentum Technology continues to do well, part of the FANG group along with Facebook, Amazon, and Google. I like to throw Apple in there as well, but Apple's really been flagging since their Worldwide Developers Conference. Regeneron, very bullish name in the healthcare space, adds 3.5%. Probably want to see what's going on there. On the loser side, MGM down 4.5%. That's a bearish stock. Very bearish Xylem, XYL, down nearly 4%. That is a casualty of the weakness that we're seeing in industrials, and in particular the machinery group. We touched on that yesterday. Boeing in the industrials group gets hit. These are all plays off trade tensions, right? General Motors, a bullish stock, down 3.8%. Mattel has really just been a disaster. No reason to really get involved there. It's solidly neutral. So small caps continue to lead. I know we've had this chart a couple of times this week, but I want to hammer home the importance of it because it is breaking the new relative highs. The 200-day moving average is rising and accelerating. That is the average of the ratio, the IWM to the SPY. Interestingly, look at the volume spike as we're breaking out. I mean, money is flowing here. You saw it in the power bars, and now here it is in the price action. Volume spikes at new highs. I added the money flow today because I really think it's telling. Look at the money flow peak here. Just institutional investors are coming to the small cap stocks, and they're coming to the IWM for small cap exposure. So we see further outperformance as trade tensions return. I definitely think you want to skew your portfolio to the long side of your portfolio, at least, to the small cap spectrum. Emerging market weakness in industrials. So we touched on industrials yesterday and how they were breaking down on a relative basis. Here's XLI on an absolute basis. You can see the consolidation since the January highs. But what's important here is that there's generally a positive correlation between the XLI, the industrials, and emerging markets. This is the EEM, the emerging market ETF. You can see the emerging markets have broken down. You can see, but for a blip in December 16 through early 17, these are generally positively correlated and usually strongly so. This increases the odds, in my view, that the industrials are going to break down on an absolute basis. They've already broken down relative to the SPY, but I think this correlation and further deterioration in emerging markets, and if we drew a line, you'd see that the downtrend has been broken. We're taking out support. That would increase the odds of industrials breaking down as well. Some of the indicative names there that you might want to look at as short candidates or get them out of the portfolio if you own them: Illinois Toolworks, Rockwell, Cat, Deere, Dover, SWK, and Roper. All weak names, either bearish or very bearish, in Chaikin Analytics. These are names you don't want to own. These are weak names in a weak part of a weak industry. Here's Illinois Toolworks today. ITW, very bearish power gauge rating, lagging the SPY since April. It's closer to overbought than it is to oversold, with bearish Chaikin money flow below the long-term trend line. It's in this machinery group, which is weak. So this is the process that we talk about. ITW is a name that you might want to look at on the short side. Illinois Toolworks, ticker ITW. Looking at the sectors, top of the sectors haven't changed. Healthcare and technology and consumer discretionary remain the same. Energy also stronger than the SPY. Some shuffling at the bottom here, but you're really, utilities, staples, industrials, real estate, and now materials all have negative power gauge ratings. Negative power bar ratios, and are all below the S&P 500. These are areas of the market that you want to avoid. Financials here kind of deteriorating as rates break down. So thank you, everybody, for listening. Thank you to StockCharts.com and StockCharts TV for hosting. You can sign up for Chaikin PowerFeed at www.chaikinanalytics.com/PowerFeed TV to get these profitable, powerful stock ideas and more every day. Have a great day, everyone.